Welcome back to Fast Money. The crypto space bouncing back today after Bitcoin suffered its worst two-day stretch in 3 years. Seema Modi's in the newsroom with more on the crypto craze. Seema.
Melissa, it's definitely been a volatile week. After staging its biggest two-day sell-off in 3 years and losing half of its value, Bitcoin is rebounding and other cryptocurrencies are following suit. Bitcoin is now 25% off its lows. Ethereum is 40% off its lows. Ripple, Litecoin up 90 and 48% respectively from lows this week. So a notable comeback for sure. Now, we have seen big drawdowns in Bitcoin before. There have been 20% or more drops since January of 2017, but they have proven to be buying opportunities. The average return after 2 weeks is 24% and 81% a month later. That according to Genesis Trading. Some of the biggest Bitcoin bulls are calling for a retest of old highs and beyond. Thomas Lee of Fundstrat reiterating his call that Bitcoin will hit 25,000 by the end of the year, calling the sell-off the biggest buying opportunity in 2018. Dan Chiatoli of Bespoke still sees Bitcoin moving higher from here, but he's reducing his 2018 price target due to the recent correction from $30,000 to $40,000 to the $20,000 to $30,000 range, contingent on important upgrades like the Lightning Network, which he says could make Bitcoin transactions more efficient. But important to note that the regulation concerns that initially sent cryptocurrencies lower have not gone away, and experts say will likely persist. Melissa, back to you.
All right, thanks so much, Seema Modi. For more on the crypto comeback and all things Bitcoin, let's bring in Spencer Brogart of Blockchain Capital. Spencer, great to see you again.
Thanks so much for having me.
You actually think that what we saw in terms of the sell-off over 2 days, that's a good thing because it shakes out weak hands.
Yeah, listen, I wish I could say that we're out of the woodworks right now, but I'm not sure that's the case. I mean, when Bitcoin in 2014, when it fell from 1,000 down to 300s, we saw a couple bumps along the way. Now, that said, I'd like to hold Bitcoin in 2018. But listen, if we think about the rest of the market, there's still a lot of coins that I think are overpriced. We're seeing many coins that are worth hundreds of millions of dollars and haven't delivered any product.
And you're talking about the coins that trade for, or once traded for less than $1. I mean, you actually think that there are a lot of uneducated investors who are grabbing the cheapest coins out there.
Absolutely. That's one of the #1 pieces of evidence for why this market is not terribly sophisticated at the moment. When you see a strong correlation between a unit bias like this, where people are just looking for the coins that are worth less than $1, it doesn't make sense, and it's not a sign of a really discerning market.
That's a really interesting point. You know, I was looking at that chart that Seema just had up there, all of those peak to trough declines from 13, 14, 15, that sort of thing. In your mind, are they comparable to what we just saw? Because back then, weren't they just real true believers there? And so the dips were buyable. Now it's a much bigger market cap. And so at this point, there's a lot of speculators versus what was going on a few years ago. Does that kind of factor into this thought process a little bit?
You know what? I'd actually disagree with that. I think that now in 2018, we have a lot of people that recognize that Bitcoin's not going away. But we have to go back, and if we rewind to 2014, when Bitcoin came off its highs of $1,000 and started declining back to 300, we had the bust of the Silk Road and Mt. Gox. People felt like this was the end of Bitcoin. That was the sentiment, even for a lot of hardcore believers. I'd say today, when I talk to a lot of people out in the marketplace, everyone recognized that Bitcoin's not going away. So there's a legion of people out there, an increasingly growing segment of people that see this as a great buying opportunity. And I definitely think that's the case with Bitcoin.
It's not going away, you say, but you do say that there's competition. And these are some interesting analogies that I read in the notes from the producer, Spencer, that you think Bitcoin and Ethereum are basically like brother and sister. They can sort of coexist. But Bitcoin does have competition when it comes to Zcash and Monero. Is that because that's the transaction side of things?
You know what? I think that the Zcashes and the Moneros of the world have a real place in this. I mean, we're getting a little bit deep in the tech here, but privacy is the other side of the coin of fungibility. So when I use my $20 bill at the local grocery store, they don't differentiate one $20 bill from another $20 bill, right? And that's an important feature of Monero and Zcash, some of these privacy coins, is that they're all treated equally. Potentially with Bitcoin, each of them has its own unique history and has its own unique set of owners that could be an asset or it could be a liability longer term.
But it sounds like those privacy coins are begging for regulators to sniff around and maybe impose some rules around them.
Sure. So I think that we need to think about privacy coins a little bit differently. It's not necessarily about let's conceal everything, but it's about selective disclosure. It's let's not expose everything to everyone in the world. Who wants to open up their bank account for everybody in the world to see? But sure, if your significant other or if a regulator or somebody wants to see it, you might be okay with selectively disclosing that information. So I think that's really the holy grail of privacy coins.
All right, Spencer, great seeing you again. Spencer Bogart. Blockchain. All right, so let's trade this here. He made some very interesting calls, Dan, especially about some of the smaller coins out there.
I think that's a great point that he made. I mean, listen, you know, the fact is like now, you know, people are believers in a way that they're committing real capital. Before, it was a much smaller sort of thing. So to me, you know, listen, I've been kind of poking around, buying a little bit, Bitcoin Cash and Ethereum. To me, they seem like the ones that kind of have some room to go here. Bitcoin, you know, this one, it seems like there's kind of some technical issues here, and people really want to build on the ones where they think it's cheaper and faster, that sort of thing.
So, well, Bitcoin Cash, to what Dan's point is, I think is actually more interesting. This discrepancy seems to still be here for a while. Although I think
discrepancy in price?
In price between Bitcoin Cash and Bitcoin.
Right.
Or the other way, I guess. But I think that should close. And then some of these ICOs, it's just the wild west of ridiculousness, for sure.
Still ahead, we are all over the Bitcoin boom here on Fast Money, and later in the show, former FDIC Chair Sheila Bair will be here to tell us why the crypto crackdowns have gone way too far. Plus, what do NVIDIA, Amazon, Boeing, and GE all have in common? There are just a handful of stocks that analysts have been missing the mark on over the last year. So how reliable are these Wall Street research reports? Elliot Spitzer, former New York governor, early investor in Tip Ranks, an analyst tracking firm, will be here to weigh in. Much more Fast Money on this very busy night. Straight ahead.